Fundamental Analysis Part 1, Introduction. What is fundamental analysis? Fundamental analysis is a method that attempts to predict the intrinsic value of an investment. It is based on the theory that the market price of an asset tends to move towards its real value or intrinsic value. In simple, fundamental analysis is to analyze the companies by studying their balance sheet, profit and loss statement and the cash flow statement to predict the intrinsic value of the stock and to determine whether the stocks are fairly valued as their current market price. One also needs to estimate the growth of the stock in the prevailing economic conditions. Before starting with fundamental analysis, one needs to understand what are company assets and liabilities. Firstly, what are assets? An asset is an economic resource. Anything tangible or intangible that is capable of being owned or controlled to produce value and that is held to have positive economic value is considered an asset. Assets represent value of ownership that can be converted into cash. In simple words, assets are all the resources that the company owns. For example, vehicle, machinery, land, debtors, etc. are few examples. Next, what are liabilities? A liability is defined as the future sacrifices of economic benefits that the entity is presently obliged to make to other entities as a result of past transactions or other past events, the settlement of which may result in the transfer or use of assets, provision of services or other yielding of economic benefits in the future. In simple words, liabilities are the value of everything that the company owes to outside creditors. For example, loans, cash to creditors, bills payable, etc. Lastly, what one needs to remember is, total assets equals liabilities plus capital. Or capital equals asset minus liability. This means that when you sell all the assets of the company and then clear the liabilities, then the money that the company will be left with is the capital. Or shareholders' wealth in case of public limited companies. Here we come to the end of this introductory tutorial. Please like and subscribe. Thank you.